Hi guys, this is Mark Shawzin, the pattern trader, and for all my gold traders out there, I just wanted to let you know that I have not forgotten about you. But as you can see in this chart of XAU USD on a daily basis, gold has slipped into a funk. This is the lowest volatility we have seen in gold since 2007. So the last 30-day range has been roughly about $33, which is the lowest volatility for that length of time since the year 2007. So to my mind, it's a question of not if, but when gold ultimately goes lower out of this low volatility funk. For the last several months, I've been having a field day trading gold back and forth within this ascending broadening price formation. It's called obviously this ascending broadening because it's ascending, and broadening because it started out life narrow and then broadened out, as you can see right at the top. With today's drop in prices, you can see that we're hovering right at the lower support line within this ascending broadening price formation, and that it is my projection once we break through here that ultimately this market will give way to the downside. In this chart, I'm looking at XAU USD spot gold on a weekly time frame. So each one of these bars represents 1 week in time. And as you can see, this week had a very poor price behavior. We made a new high for the week, and the week is not closed, but it appears that we're going to close closer to the low than the high. Now all that can change. We still have a day and a half for this market to finish this 1 week price bar, but if things hold as it looks now, this is, to my mind, a very ominous looking key reversal. Again, what I mean by key reversal, it's simply observing how market prices close relative to the high and low. By closing on the low of the weekly bar, it indicates that the sellers are in charge of the week, and very often these key reversals point in the direction that the market wants to ultimately go in. You can see a good representation of a key reversal was right here. And again, you saw a couple right here and then there, and what happened thereafter. I think the same thing will happen here. As you can see, we're sitting on a lower support line connecting all these recent weekly lows. We kind of have a bit of a symmetrical triangle forming on this weekly chart. And again, I'm projecting once we break through this lower area, which is about 1260 on these weekly time frames, it will give way to lower prices in XAU USD. In this chart, I'm looking at XAU USD, this time on a monthly time frame where each one of these bars represents 1 month in time. And for me, the governing price pattern in XAU USD for the last couple of years is this descending wedge triangle. A descending wedge triangle is denoted by a sloping downtrend line that connects all the highs and a horizontal line that connects all the lows. Now, this is a reversal pattern. This basically indicated a market trend that was leading up to it, a huge uptrend, and once it penetrated out of here, likely to be a reversal pattern, which will dictate the market going forward, and in this case, I think will ultimately lead to the downside. Just like we observed the key reversal on the weekly time frame a moment ago, back in September, we had a monthly key reversal. Again, the market made a new high at around the 1380 level and ultimately closed $110 lower at around the 1270 area. Again, this 1380 to 1400 area has been a very troublesome area for gold. It's been a ceiling that for many years this pair has been unable to break through. And again, I think that this key reversal in September is an ominous indication where this price is ultimately going to head in XAU USD. More recently, when I connect the trend lines in the monthly gold chart, I see the appearance of a symmetrical triangle when we conjoin the lows and the highs as I've indicated here. Now, in August, we broke out of this symmetrical triangle. I wasn't sure if this represented a paradigm shift, but with the key reversal in September and the likelihood that we're going to reverse back through here, it does seem that we are going to go the other way, and that the breakout in August was just a false breakout above this symmetrical triangle. Now, in addition to the key reversal in September, you can see that we've had these two coiling, what I call inside bars, or narrow range, in this case, month bars. So you can see how the range of these 2 months has been coiling. The narrow, the low volatility. I sometimes make the comparison to holding a beach ball under water. Imagine, if you will, you push it down with your hand more and more, and then you let your hand off. What happens? The pressure just releases. And in this case, it's my expectation that if and when we get under these weekly ranges at or near the 1260 price area, that the market will ultimately give way to lower prices. So for those aggressive traders, I would recommend you getting short gold at current prices around 1273. For those more conservative, you could put a pending or resting order at 1260. And it's my belief once that level is triggered, we will go through there like a knife through butter, and we will see ultimately much lower prices in gold. So I'm going to withhold making any recommendations today in my email. But again, for those more aggressive traders, you can start putting a toe in the water on the short side. For those more conservative, you can put a pending or resting order at 1260. And I'm going to see how the week ends tomorrow, and then probably give you a recommendation based on Sunday's trading. So until then, I wish you a healthy and prosperous trading week, and I'll see you next time. Thank you again. Bye-bye.